Be Wealthy and Smart, episode 1277.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about housing prices at the highest level for any October. Right now, the perception and the narrative that's being presented is that the housing market is terrible, but actually, it's just really tight on inventory, and that's been driving housing prices higher. We all know interest rates have been stubbornly high, but they've started to trend lower recently. And that's good news for buyers, as that trend, I believe, will continue into next year. There were 1.15 million previously owned homes on the market in October, which is down 5.7% from a year ago. So inventory remains very tight. And since most homeowners have mortgage rates under 5%, that makes many people who own homes reluctant to sell and have to have a higher interest rate on their mortgage. Lawrence Yun, the National Association of Realtors chief economist, told reporters that realtors will be speaking with their representatives in the U.S. Congress about a government tax incentive for homeowners who have been living in their homes for a long period to encourage them to put their houses on the market. Now, we don't have the details on that, but it sounds very interesting, and it certainly got my attention when I saw special tax incentive, so we'll have to pay attention and hear what that is. Now, right now, with supply being so tight, at October's sales pace, it would take 3.6 months to sell the current inventory of existing homes, up from 3.3 months a year ago. A 4 to 7 month supply is usually viewed as a healthy balance of homes between supply and demand. So we are definitely on the low side. And that's why I believe we can't have a crash when you have hardly any inventory. Crashes happen when you have lots of inventory and everybody sells at once. That's not where we are. Builders have been breaking more ground on new housing projects, but are being constrained by higher borrowing costs, so it's affecting builders as well. We're getting back to multiple offers again, with supply still being tight. In some areas, home prices on an upward trend on a year-over-year basis were experiencing multiple offers. The median existing home price rose 3.4% from a year earlier to $391,800, which is the highest for any October. That's a record for any October sales price of homes. And about 28% of the homes sold last month were above the listing price, which is what I've been sharing with you is my forecast that we will have multiple offers again. We will go back to higher prices and the craziness in the market in the next 2 years as interest rates trend lower. We're starting to see that happen already. The average time on the market is about 23 days during October, up from 21 days a year ago, and 66% of homes sold in October were on the market for less than a month. First-time buyers accounted for 28% of sales, as they did a year ago. But that's well below the 40% that economists and realtors say is needed for a robust housing market. All cash sales were higher at 29% of transactions, up from 26% a year ago. And distressed sales, including foreclosures, were only 2% of transactions, virtually unchanged from last year. So there again, you see the foreclosure market is very, very small, indicating this is still a strong housing market. And when we look at the actual home sales in October, it was the lowest level in more than 13 years. Once again, because there's just not much inventory. Sales fell in the Northeast, West, and in the South. They were unchanged in the Midwest, which is the most affordable region. So until interest rates come down a little bit more and sellers decide they want to sell their home to buy another home, we're going to have a bit of a tight market. But we're seeing inflation come down. That's going to help interest rates trend down. And into the first quarter of next year, we should see things start to move a little bit better. And we've already seen interest rates, which peaked at 7.79% in late October, trend down to about 7.44% last week. So in summary, it's still a seller's market, but buyers with cash are getting transactions done. As interest rates trend lower, I would expect to see more inventory come on the market and get a little bit more back into balance than having such tight inventory that we do right now. So if you're looking for a home, hang in there. I think things are about to get better as rates trend lower into next year. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.